Welcome to Earnings Recap. Today we're covering Microsoft Corporation's earnings report, January-March 2025.
Yeah.
If you enjoy this kind of content, please like the video and subscribe to the channel. Today we're doing our deep dive into Microsoft's latest numbers.
That's right.
We'll break down their Q3 results, revenue, profit, growth, and try to get a sense of where they're headed, all in plain English, nice and quick.
Exactly. We'll hit the key figures. Revenue, net income, earnings per share. Look at how they stack up year over year and see what the forward guidance tells us.
Okay, let's dive right in then. The big picture for this past quarter, ending March 31st, how did Microsoft do overall?
Pretty strong, actually. Total revenue landed at $70.066 billion.
$70 billion, wow.
Yeah, and that's up 13% compared to the same time last year when they pulled in $61.858 billion.
13% for a company that size.
Yeah.
That's still really significant growth, isn't it?
It really is. And the bottom line looks good, too.
So net income.
Net income saw an even bigger jump percentage-wise. It came in at $25.824 billion for the quarter. And that's an 18% increase from the $21.939 billion they made in Q3 of 24.
18% growth on the profit side. Very solid. And earnings per share for folks tracking that.
Diluted EPS also up 18%. It reached $3.46 per share. Up from $2.94 in the prior year's quarter. So nice alignment there between net income and EPS growth.
Right. And if we sort of zoom out slightly, look at the year so far, the 9 months.
Good point. For the 9 months ending March 31st, the trends hold. Total revenue hit $205.283 billion.
Over $200 billion already.
Yeah, and that's up 14% year over year. Net income for those 9 months, $74.599 billion, which is a 13% increase.
Okay.
And diluted EPS for that whole 9-month stretch was $9.99, also up 13%. So, really consistent, healthy growth pretty much however you slice it.
That's definitely the headline. Strong, consistent growth. So where is this growth actually coming from? Microsoft's got a few big divisions, right?
They do. They basically break it down into 3 main chunks. You've got productivity and business processes. Think Office, LinkedIn, Dynamics.
Also work stuff.
Then Intelligent Cloud, which is, primarily Azure and server products.
Big one these days.
And finally, more personal computing. That's Windows, Surface devices, search advertising, and gaming, like Xbox.
Okay.
And the interesting thing this quarter, revenue was up across all 3.
All contributing. Okay, well, let's start with Intelligent Cloud. Feels like that's where a lot of the action is. How did that segment perform?
It was definitely the star performer again. Revenue hit $26.751 billion.
$26 billion.
Which is a really strong 21% increase year over year. That's about $4.6 billion more than last year.
And what's driving that? Is it all Azure?
Mostly, yeah. No. Azure and their other cloud services just rocketed up by 33%.
33%.
But here's the really fascinating part. They actually broke out the contribution from AI services within that.
Oh, interesting. What did they say?
16 percentage points of that 33% Azure growth came specifically from AI services.
16 points. So nearly half of that huge Azure growth is just AI.
Exactly. It just shows how central AI is becoming, not just strategically, but, in terms of actual dollars flowing in.
That's a massive number. It really underscores the bet they're making.
Absolutely. Though it's worth noting, within that same Intelligent Cloud segment, their traditional server products revenue actually decreased by 6%.
Ah, okay. So the shift to cloud continues, eating into the old on-prem stuff.
That seems to be the story, yeah. Businesses are moving workloads to the cloud, so less demand for physical servers. Pretty standard trend across the industry, really.
Makes sense. Okay, let's switch over to productivity and business processes. Microsoft 365, LinkedIn, how did they do?
Still very solid. Revenue there was $29.944 billion. That's up 10%, or about $2.8 billion more year over year.
10% growth, steady.
Yeah, steady is a good word. The main engine was Microsoft 365 commercial. The business side of Office products and cloud services grew 11%.
Okay.
And if you drill down just into the commercial cloud part of that segment, that was up 12%. So continued demand for their core productivity suite in the cloud.
Good. Reliable growth in a mature market. All right, last segment. More personal computing.
Yep.
Windows, Xbox, Surface. What happened there?
This one was a bit more mixed, but still positive overall. Revenue reached $13.371 billion.
Which was up
6%, or about $767 million compared to last year.
And what drove that?
Mostly search and news advertising revenue, but Windows also contributed. Windows OEM revenue, that's the licenses sold with new PCs and devices revenue together, were up 3%, mainly thanks to Windows OEM.
Okay, so PC market may be stabilizing a bit.
Seems like it might be, yeah, or at least Microsoft is navigating it well.
And what about gaming? Xbox can be kind of up and down.
Right. Well, overall, gaming revenue actually increased by 9%, but it's a tale of two cities. Xbox content and services revenue shot up 18%.
Content and services.
Yeah.
So Game Pass and maybe games from Activision Blizzard.
Exactly. The report called out both Activision Blizzard and Game Pass subscriptions as key drivers there. People are spending on the games and the service.
But I sense a but.
But Xbox hardware revenue was down 26%.
Oof. 26% drop in console sales.
Yeah. So fewer people buying new Xbox consoles, but the ones who have them are spending more on games and services.
Yep.
It's a common pattern later in a console cycle, maybe amplified here.
Interesting dynamic. Okay, so growth across the board, but driven by different things in each segment. Let's talk profitability. Did all this revenue translate into better margins?
Well, yes and no. Gross margin dollars did increase, up 11% to $48.147 billion, so more raw profit dollars.
But the no part.
The gross margin percentage actually decreased. It was squeezed a bit.
Why was that?
Primarily due to the intelligent cloud segment again, and specifically the report points to the costs involved in scaling up their AI infrastructure.
So building out all those AI data centers and servers costs money.
A lot of money. They mentioned the overall Microsoft Cloud gross margin percentage actually dipped to 69% because of these investments.
69%. Still high, but lower than before.
So the AI revenue boost comes with a cost.
Precisely. It's an investment phase. But despite that pressure on gross margin,
yes,
operating income was still strong. It grew 16% to $32 billion for the quarter.
16% operating income growth. So the revenue growth is currently outpacing those rising costs.
It seems so, yeah. And that operating income growth was seen across all three segments, which is positive.
Good to know. Okay, let's look ahead. What did the report suggest about the future, their forward guidance or outlook?
Well, they didn't give explicit number guidance in this document, but the commentary was pretty clear. They emphasized continued significant investments.
In cloud and AI, I assume.
Exactly. Cloud, AI infrastructure, and also devices. And they explicitly stated these investments will increase operating costs.
And could pressure margins further? Yes. They warned it could potentially decrease operating margins going forward. So they're signaling, expect us to keep spending heavily here, even if it impacts short-term profitability. It's about long-term positioning.
Investing for the future. Makes sense. Did they mention any specific challenges or risks on the horizon?
They did touch on a few things. Potential supply chain issues, cost volatility, related to the global economy and trade policies, the usual kind of macro risks.
Things that could impact hardware or raise costs.
Right. And they also directly said capital expenditures, CapEx, are expected to keep rising in the coming years to build out all that cloud and AI capacity. They're expanding data centers, buying more servers.
Big bets require big spending. What about future revenue they already have locked in? Any visibility there?
Yeah, they mentioned their remaining performance obligation, or RPO, basically contracted revenue they haven't booked yet.
And that number was?
A huge $321 billion across the whole company.
$321 billion.
Massive backlog. And they expect to recognize about 40% of that, so roughly $128 billion over the next 12 months. That provides a pretty solid base for near-term revenue.
Definitely gives some confidence in the pipeline. Okay, any other interesting financial nuggets? Cash flow.
Very strong. For the 9 months, cash from operations ramped up to $93.5 billion. Shows the core business is just generating a ton of cash.
$93 billion in 9 months? And what are they doing with that cash? Returning it to shareholders?
They are. Over those same 9 months, they repurchased $9.8 billion of their own stock.
Okay, buybacks.
And they declared $18.5 billion in dividends. So a significant return of capital continues to be part of the strategy.
Consistent shareholder returns. Good to see. One last detail. Any news on the tax front?
Not really major news. The effective tax rate held steady at 18%, same as last year for both the quarter and the 9 months. They did note the ongoing IRS audit for tax years 2014 to 2017 is still happening, and they're contesting some proposed adjustments for even earlier years. But it sounds like standard long-running corporate tax stuff, nothing alarming right now.
Got it. Okay, so let's try and wrap this up. If you had to boil down the key takeaways from this Microsoft earnings report, what would they be?
I'd say, number one, strong overall growth continues, both top and bottom line. 13% revenue, 18% net income for the quarter, really solid.
Driven heavily by.
Driven heavily by intelligent cloud, and within that, Azure's phenomenal 33% growth, with AI services making up a huge chunk, those 16 percentage points of that growth. That's takeaway number 2. AI is not just hype, it's a real significant revenue driver now.
Right, that AI number really stands out.
Definitely. Takeaway number 3. They are investing heavily in that AI future, primarily through scaling infrastructure. This is putting some pressure on cloud margins, even though operating income is still growing nicely overall.
So investment impacting margins is something to watch.
For sure. And finally, takeaway 4. The company remains a cash machine, generating tons of cash from operations and consistently returning a good portion of it to shareholders via buybacks and dividends.
Strong growth, AI taking off, heavy investment, and shareholder returns. Seems like a good summary.
Yeah, I think that covers the main points.
So looking forward, the big question really hangs over that AI investment, doesn't it?
It really does. As you think about this, consider how these massive investments in AI infrastructure, plus their key partnerships, like with OpenAI, how will that shape their earnings and their competitive position down the road?
Yeah, what are the long-term impacts on profitability, on market share, as AI gets even more embedded everywhere?
Exactly. Can they keep growing revenue fast enough to justify the spending? And can they eventually improve the margins on these AI services? That's the multi-billion-dollar question, isn't it? How effectively they navigate that will really tell the story for Microsoft over the next few years.
Fascinating stuff to watch. Thanks for breaking that all down.
My pleasure. Always interesting to dig into Microsoft's numbers.